Well, good morning. This is Bruce at Fleet Capital Management. It's Friday morning, the 18th day of April, 2025. The market is closed for Good Friday. So we're going to take this opportunity, take a look at the markets, and I'm going to drill a little bit deeper down into my thoughts on Bitcoin. And also, I'm going to introduce you to a new short-term trading program that I'm going to offer to Group 1 accounts first, see how that goes, and then potentially roll it out to Group 2 and even possibly Group 3 if they choose to participate in this. I'll explain all of this in just a moment. Um, we always start by saying that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please email me, Bruce at fleetcapitalmanagement.com. You always know that I'm here for you. So let's start by talking about Bitcoin. Many of my clients are in these new structured Bitcoin investments that either have zero downside risk or 10% downside risk. And I believe there's one that has 20% downside with lots of upside. So we want to be involved in Bitcoin because Bitcoin is a fascinating asset class that is very volatile. That's why we're in the guaranteed, but also has the ability to make us a lot of money. I had mentioned to you that when the time was right, I would go back into IBIT, IBIT, that has no protection other than my stop management, in order to take advantage, if you will, of shorter term swings in the Bitcoin marketplace and see if we can't add, hopefully, substantial returns. Last week, I believe I talked to you. I think I showed you this slide, and I talked about Bitcoin. I'm going to go a little bit deeper today. Bitcoin had a very huge run up. This is a weekly chart. You can always tell because it says 1 week right there. So each bar equals 1 week in time. And so for a couple, 3 months, we had this huge run. I think we made about 60% in Bitcoin. And then it kind of went sideways in a pattern. And like I said, in a consolidation phase, we never know if it's going to break up or break down. We actually got out of Bitcoin somewhere around in here. And for that consolidation phase, it actually broke down like everything else did when Trump started this whole tariff nonsense. It dropped down pretty significantly, and now it is trading sideways again. You can see that, and I've highlighted this with a box. And I said, I'm seeing, I think it was last week, I said, I'm seeing a number of positive signs. Doesn't mean they're going to work out that way, but I'm seeing a number of positive signs. What are they? Well, number one, we came down to the bottom of the linear regression, which is 2 standard deviations, and we didn't close below it. And then the next week, which was this week, we actually closed back up. I see that as a positive sign. This is one of my momentum indicators. Yes, it is down, but just a smidge and could begin to turn back up. This is an on balance volume indicator. Of course, the volume has been to the downside as the market's been falling, but you can see it's just about kissing and very potentially it could turn back up. This is another type of momentum indicator called RSI. I have it set to very specific settings, and you can see that the yellow line, which is the actual RSI, the blue line is the moving average of the RSI, could potentially be crossing up. These are positive potential indications for this, for IBIT. Let's go on. This is a chart that I don't think you've ever seen me use, but this is called a rainbow price indicator for Bitcoin. Real simple. It has a number of different colored zones. And when price is in the darkest blue zone, the little one on the very bottom, that's what this indicator considers an extreme buy zone, that it's grossly oversold. And I want to be very clear, that doesn't mean it can't continue to go down. But this is a way we can kind of see based on history where the price is. And then the next zone up, it's a little bit lighter blue, is considered a buy zone. And then we go into this green, which is a little less of a buy zone, but still buy. And up at the top, these are extreme oversold. Here's a good example. It can go overbought, I should say. It can go overbought before it comes back down. It doesn't have to stop at the band. But if you look over here, this was yesterday. And we've been going sideways with Bitcoin, as I just showed you, that consolidation zone. And we're currently still in that second to deepest group, and it might be turning up. Just one more indicator. That's all that is. I was reading an analysis the other day, which I found fascinating. I think this was yes, it was yesterday, the 17th, when it came out. This was an analysis on the relationship between gold and Bitcoin prices. And let me read this to you. It says, when gold prices hit new highs, which we have, history shows Bitcoin follows that within about 150 days. Okay. In 2017, Bitcoin rallied to $19,120 after gold witnessed a 30% hike a few months earlier. Similarly, gold reached a new high near $2,000 in 2020 during the COVID pandemic, which preceded Bitcoin's surge to $69,000. Bitcoin has historically surpassed its previous all-time highs whenever gold rallies, reflecting a dynamic relationship between the two assets during, this is important, during periods of economic uncertainty, we're there, and when investors look for a US dollar alternative. The dollar is getting crushed because of Trump policies. So things are kind of interesting. This further in that analysis, it says looking at data from past Bitcoin cycles and Bitcoin's power curve time contours. I'll explain to you what that means. The analysts predicted that Bitcoin will enter a parabolic phase. That's a kind of a straight up phase in the latter half of 2025 with a price target as high as 400,000. And that was using the power law model below. And here's basically what this is. So it's just showing what happens to the price of Bitcoin in certain periods. Here was a kind of a parabolic rise. Here was a bit of a parabolic rise. Here it didn't. It kind of went sideways, went up, but it went sideways. And we're in one of those phases right now. It had been coming down, but what has gold been doing? Gold's been kind of going through the roof because of inflation fears, uncertainty, and everything else. So again, take this as nothing more than one more data point of a possibility or probability for Bitcoin price. Lastly, this is a chart that I made yesterday. This side is 1 day, and this side is 1 week of Bitcoin, the underlying Bitcoin. And I want to show you a number of things that I'm seeing. On the daily, that white line is just a 3 day moving average. It's a very fast moving average. It crossed over the 20, which was great. And now, not only is price over the 50, but it looks like we're about to cross up over the 50 on our 3 day moving average. That's very bullish. If I go to the weekly side, here is that consolidation, but you're seeing the 2 week white, 2 week moving average is really close to crossing that 10-week moving average. That would be a rather bullish sign. And breaking above this box would be another bullish sign. So we'll come back to this in just a moment. Now, let's leave Bitcoin and let's talk about the volatility in the marketplace. The volatility that we're seeing in the marketplace, 100% due to Trump and his very misguided tariff policies, is we're seeing cross currents in the market. We're seeing huge up days, huge down days, just absolute insane levels of volatility. Well, we want to try to take advantage of that. So I am introducing today a new advanced trading short-term swing program that I'm calling cross trading, and you'll understand why in a moment. In cross trading, we're going to be purchasing securities if we're looking for the market to go up that will give us 2 times the rate of return as the market is going up. So it's 2 to 1. But if the market is going down and these are different securities, we're going to go 1 to 1 on the downside. So if we're trying to make money as the market's going down, we're not going to use leverage, which is much more aggressive and much riskier. We're just going to buy an investment that actually profits as the market's going down. When the market is going up, when we're in a bullish trend for the market, we're going to then employ leverage and use 2 to 1 so that let's say we're trading the S&P 500, the SPY, and let's say for a week the SPY is up 2%, we would be up 4%. Okay. Why am I doing 2 to 1 up and 1 to 1 down? It is because the market generally goes up. The market wants to go up. The bias is always to the upside. Picture being in a pool or the ocean with an inflated ball and push that ball underneath the water, and it gets harder and harder and harder until it pops back up. That is really a good analogy for the US stock market. Yes, it can be pulled down. But then when it comes back up fast because we live in an economy that needs to be growing. Corporations want their stock prices to go up. Money managers want their portfolio prices to go up. So there's a very strong bias. So anyway, that's why I'm doing it this way. We're going to begin with Group 1 accounts only for now. This is, I wouldn't say it's overly aggressive, but it is very short term. So that adds to the aggressive nature of trying to capitalize 2 to 1 when the market's going up and 1 to 1 when the market's going down. We will be switching between the S&P 500 and the NASDAQ, which is the Qs, to avoid what's known as the wash sale rules. So here's what that means. Let's say we buy the S&P and on this particular trade, we have a loss. We lose 1%. The rule is you cannot buy back into that same security for 31 days, or you will lose the ability to use that 1% loss on your taxes to offset gains. That's called the wash sale rules. But if I have a loss on the S&P, the very next day I could go and buy the Qs. It's a different security. And I would do that, and then 31 days later I could go back to the S&P. I know this is a little confusing, and in reality, for Group 1, it's not going to matter a lot because most Group 1 accounts are IRAs. So this won't matter. Most, about 80% of my Group 1 accounts are IRAs. And in IRAs, there is no wash sale rule. But all I want you to know is it's not the end of the world if we get a wash sale. It just means if we lose 1 or 2%, we can't use it on our taxes as a loss. It's not the end of the world. And these are going to be fairly small trades relative to the overall portfolio. But I just wanted you to know behind the scenes, I'm watching this and trying to avoid any wash sale rules. Hopefully that makes sense. I'm going to show you all of this on the chart, and I think it'll all come together. Most important thing is knowing whether the market's going up or down, especially for this new short-term trading. But let's take a look. Let's go over to bear with me 1 second. Let me come back over to here. Okay, our matrix. Let me go find our matrix. Where did it go? Let's close this down. And there it is. I'm sorry for all that. So this is updated through yesterday. The market closed yesterday, the 17th. And the S&P, which is what I base this on, is still in a down situation. The S&P weekly, which is more important than daily, is because it's a longer term, smoother type of analysis, are still in down. Welcome to the technical bear market. We crossed over early in the week, and now we are in bear market territory solely because of Trump's tariffs. Our bear market avoidance indicator has been down and warning us of this for quite a long time. The VIX, which is the fear index, and we like to see it at 17 or below, or at least under 20, has been really exceptionally high for a long time. It's now at least back down in the 20s, but 20 is too high. 20 means, and what this means is when the fear index is especially above 20, I would say maybe even above 18, you're going to see volatility in the market, swings, really aggressive swings, because People are fearful. They don't know if the market should be going up, should it be going down, and you get a lot of volatility. When the VIX is under 17, 17 or below, we have far less dramatic swings, and we generally just have an orderly bull market. That's what that means. Okay, let's go over to our charts. And the first thing I want to show you is this is the S&P on the weekly. This is the S&P on the daily. And we already saw those lines here. The blue line is our avoidance, our bear market avoidance indicator. Um, and that's been helping us. That has protected us to a significant degree. I mean, you might see your account down 1 or 2%. If you do, I haven't looked yet, but I will be doing some of that over the weekend. But the market might be down 10 or 12%. So it has been protecting us. Um, the on the weekly, we came down to this area of resistance, which is that green line right here. And it seems like we've bounced off of that resistance level. That's a good sign. That's a good sign. A bad sign is that we continue to trend down, and our 3-day moving average is pointing down, well below our 20-day moving average. Not a good sign. So when I say there are all kinds of mixed signals, this is what I mean. Okay, I can't tell you with any certainty based on just these two charts of technical analysis whether the market's going up next week or down next week. There's just nothing clear. If there is anything clear, we are more in a downtrend than we are in an uptrend, much more. So I would say the probabilities are greater that we go down. Okay. Now I'm going to expand this because this is a 1 hour chart of the SPY. Okay. And now we're going to talk about this new trading program because it's going to be based off of the 1 hour chart on the SPY. And bear with me, I'm going to do my best to make this make sense. When the weekly chart is in a downtrend, which it is, and the daily chart is in a downtrend, which it is, we will then use the hourly chart for this short-term trading. And the reason I call it cross training is because I'm looking for crosses in different indicators that I use. For instance, this date was April 2nd. Funny enough, this is the date that Trump enacted the tariffs. So this is really the start of what I'm going to call the bear market. You can see that white line crossed the blue line. And you can also see on my momentum indicator that we crossed the zero line, meaning we went from blue to red on, that's the zero line. Our volume crossed from green to red, and our RSI crossed below its moving average. So, without going into too much detail, we may have bought right here where that day closed or that hour closed and gone into an inverse ETF that profits to the downside. And we would, each one of these bars is 1 hour, by the way. And we would have held it until we see a positive cross. So we may have held it to here. There would have been, let me get crosshairs for you. We may have held it to about here, and we would have had a pretty good gain. We may have held it to here when the RSI crossed, and we still would have had a pretty good gain. I will use those. That's going to be based on just observation and feel when we get out. I'm not going to be overly aggressive. I don't want to be greedy with this. But you can see that we were looking for crosses in indicators when it comes to momentum. This was a cross up. We would have not gone bullish on this because the weekly and the daily are down. Okay, but when it crossed, I don't know why the mouse is doing these funny things. When it crossed back down, which is there, we may have gone into another inverse ETF and tried to make a few percentage points. Remember, these are hours. We may have made a few percentage points and then we would have gotten out. And when it crossed up, we would not have gone in. So, you don't need to let me know that the market's going up. We should be going in. We can't because everything is pointing down. We may have gone back in here, and this probably would have been a break-even trade. I doubt we would have made any money on that. We would not have taken this. We might have taken this. This looks like a good trade, and then we would have gotten out, and so on. So that's why I call this cross trading. But I'm going to say this again, and I don't mean to be redundant, but it's important. We will only use downside crosses when the weekly and the daily are pointing down. If we go back into a bull market, we will then be using the 2-to-1 upside and we won't be using the downside. So we're going to trade in the direction of the weekly and the daily trend. If the weekly and the daily trend are opposite of each other, meaning if the weekly is still showing down and the daily showing up, we'll take no trades. And all we're trying to do is get as much of the trend and momentum on our side as we possibly can. Now, with that said, let's go over to now. Right now, yesterday, when the market closed, you can see that that very short-term hourly moving average is now kissing the blue moving average. This is a 2 hour and an 8 hour, by the way. And it looks like they may cross on Monday. If they do, I need more than that. I've already got the OBV crossing down. I need to get my momentum turning down, and I'd like to see my RSI cross below that blue line. If that happens, we're going to do one of these downside ETFs trying to make money as the market is going down. Um, I hope that makes sense. I know it's a lot because it's kind of new. We're going to start doing this again only in group one accounts. I will be using the S&P or SPY and the QQQ or NASDAQ 100. Those are the only two tools for now that I will be using. We'll be doing group one only for now. And I can't tell you how long we'll stay in a trade. We may stay in a trade for 2 hours. We may stay in a trade for 2 days. We may stay in a trade if we're lucky for 2 weeks. I doubt it, but we could. And the longer the term, the more money we'll be making. So I don't want to get out, but I have a lot of tools to get out because with this type of trading, you just don't want to be greedy. It'll burn you if you're greedy, and I won't be greedy. If we can add 1 or 2 or 3 percentage points multiple times a month, uh, that's significant. So we don't need to make a lot of money on each trade. That's important for you to see. Let me think if there was anything else that I wanted to show you. Let's go over to gold for a second. Do you see how parabolic gold has gone? This is the gold price. We're making money on this. This is great. I absolutely hate that it's so far above the linear regression. I don't like the distance between the 2 week and the 10-week moving average. In a normal situation, and we're not in that, I would put a stop like right above here, and because I would just say it's going to come back down and get back in the linear regression. But we're not in normal times right now. We are in potential inflationary times. We're in times where investors are running towards safer assets, and all of that is extraordinarily good for gold. I won't let it come all the way back down. I do have an alert stop here that will let me know. But now, the reason I bring this up, not only to show you the gold trade that we're in, but this is what the analyst was talking about is when gold starts to go parabolic, when gold is hitting new all-time highs, that's when Bitcoin usually follows. Now, I'm not going into Bitcoin on Monday. Don't get me wrong. Here, let's go back to Bitcoin. I need to see a couple more things happen. Not much, but a couple more things happen before I'm going back into Bitcoin. The most important is I want to see that 2 week cross the 10 week, and I want to see this momentum turn back up. If that happens, we're going back in for those who wanted to be in IBIT, and we're going to make as much money as we can, and then we'll get out, and then we'll do it again. We're just going to keep rinse and repeat. So don't think that you're going to see Bitcoin on Monday morning. I doubt it unless something drastic happens. Okay, that's a story. I don't want to take any more of your time for this 3-day weekend. I hope you have a wonderful weekend. I hope this information helped. If you have any questions, which I suspect you might, all you have to do is shoot me an email and or hop on my calendar and we'll talk about it. and let's survive this, what I'm calling, lots of people are calling the Trump trade. It's ridiculous. It will end. It can't go on like this. It's disrupting the entire world economy. There are predictions now that the global economy could be going into a recession, all because of this one man's very preposterous policies. It's fascinating to me that one man, his ideas that are every economist in the world say are ridiculous, could be causing a recession for the world, for the whole world, the world economy, and that's from the IMF, the International Monetary Fund. I think that there's a chance we go into recession in the United States. Don't fear that. A recession without inflation is good for the stock market because the Fed will start reducing interest rates. That's really good for the stock market. If we have a recession and inflationary prices, that's stagflation, and we've already covered that. That's not good. So I don't know which way the economy is going to fall, but we're going to try to manage and take advantage of whatever they throw out at us, and we're doing fine so far. I want to do better. So that's a story. Call me with any questions. I'm always here. Talk to you soon. Bye bye.